there's a growing chorus of people who are pointing to privacy coins as a hedge on your Bitcoin holdings. People are saying that, like the cypherpunks, the OGs, are cashing out of their Bitcoin and moving into privacy coins. Welcome back to The Weekly. I'm Graham Stone, joined as usual by Bitcoin.com news David Sensel. Let's get into the weekly recap of the biggest stories in the Bitcoin and cryptoverse. Good morning, David.
Good morning from Asia. Monday morning. It's been a rough stretch for Bitcoin and all digital assets, to be fair. Well, almost all. Bitcoin fell more than 9% last week. And during the past day, it trimmed about 1.7% against the US dollar. The downswing leaves Bitcoin with a far slimmer 1.88 trillion valuation. 7 days ago, the market cap sat at 2.07 trillion, meaning roughly $190 billion has evaporated over the week. We've also seen some of the biggest Bitcoin ETF outflows since the start of the ETF. On Thursday, net outflows were $870 million, which is the second largest single day of outflows. 10 of the last 12 days have seen negative flows. Oof, rough week.
Yeah, brutal. But is some good news in the last week. So one of these stories that came out this week was that Harvard, one of the world's biggest endowments, according to a SEC filing that they had to submit, their IBIT holdings, their BlackRock's ETF shares that they hold, are their biggest holdings in their portfolio for their public equities portion of their portfolio. So the total amount of the Harvard endowment is almost $57 billion, and about 1% of that is held in Bitcoin. So that's about $440 million. It accounts for 21% of their U.S. public equities portfolio, making it their largest holding in the U.S. public equities section of their portfolio. Now, Bloomberg ETF analyst Eric Balkunas weighed in on the matter. He said that, just checked, and IBIT is now Harvard's largest position, and it's 13F, and its biggest position increase in Q3. It's super rare / difficult to get an endowment to bite on an ETF, especially a Harvard or Yale. So this is as good a validation as an ETF can get. That said, $500 million is a mere 1% of the total endowment. Still big enough to rank 16th among IBIT holders.
Not bad. I've heard that Harvard also teaches education, but yeah.
Yeah, they do have an education business somewhere in there.
Yeah, I mean, that's a joke, though. That's a joke that's been going around for a while, which is Harvard, the education side is a vehicle for their business portfolio.
Yes. In other bullish news, Bitcoin treasuries continue to rise. So according to a report from bitcointreasuries.net, despite a slowdown in net Bitcoin additions, so 14,447 BTC were added in October compared to 38,000 in September. Despite the slowdown, treasury holdings remain at an all-time high. So you can see this chart here. It's just a steady grind up of corporate treasuries around the world holding Bitcoin. So they continue to accumulate, although at a lesser pace than before. They haven't been dumping their holdings.
Just as an aside to this, Graham, did you see Michael Saylor's poorly timed X post where it was an image of a ship in the background? Titanic-looking ship, and then he was on a light raft, like on a raft.
Yeah. People were saying that it's bad. Like the implication was that the Bitcoin is the ship that's going down, right?
Well, I mean, there's different ways to interpret it. You could say that MSTR is the ship. You could say that Bitcoin is the ship. You could say that fiat is the ship. There was orange coloring on the ship, though.
Okay, well, I mean, it's long been a meme that Bitcoin is your life raft, right? And in the sinking fiat thing is the Titanic. So that's what they were intending, but it just didn't look good on that date. People interpreted it as Bitcoin sinking and Michael Saylor's on the life raft getting out. Yeah.
Well, you have MSTR doing poorly. You have Bitcoin doing poorly. You have the dollar doing well in comparison. So, I mean, again, the timing is just funny. Anyway, sorry.
Yeah, that's funny. One other, pretty bullish development is that the Czech Central Bank announced a pilot to, it's like a $1 million, tiny amount, but $1 million digital asset test portfolio. And they're holding Bitcoin and looking to hold some stable coins in there as well. And here's a quote from the Czech National Bank. They say, "The purpose of the portfolio is to gain practical experience with holding digital assets and to implement and test the necessary related processes." They do know that, quote, the central bank is not planning to include Bitcoin or other digital assets in its international reserves in the near future. That being said, the fact that they're testing it does seem to indicate that they're showing at least some interest in this, forward looking.
Yeah. Small but bullish news. And in actual, full on bull cycle bullish news, despite Bitcoin tanking, somehow privacy is a bright spot in the market. And this is fully bullish, head-scratchingly bullish, if you will. Privacy coin Zcash is the kind of vanguard of this, or the poster child of privacy doing well. It surged to an intraday high of $741 per privacy coin. This is a continuation of a multi-week rally. As of yesterday, Zcash traded near $738. This is up 236% in the last 30 days. 1,170% year to date. By comparison, Bitcoin is flat or slightly negative year to date. It's a big ouch. Despite the rally, Zcash still remains well below its extreme early day peaks from 2016. If you look at a chart that has these early markets, you'll see it looks pretty wild. The markets were about, I think Zcash had a high of between $5,000 and $6,000 per coin in those early days. Of course, it was highly illiquid. And later on, I think CoinGecko has the all-time high at like $3,100 or something like that. So make of that what you will. Zcash is now the 12th largest crypto asset with a market cap of around $11.7 billion. And it has, I think Zcash's run has kind of reignited this privacy narrative, and other privacy coins are drafting along this. Monero, what has done well in the past, in the recent past, you have Dash, 19% up, DCR, 7.3% up, Rail, 2.7%, Zen, 1.6%, Xano, 0.5%, and Monero, 9%. So all of these doing well. Privacy appears to be the next big narrative. You have figures like Arthur Hayes, Andrew Tate, and Snowden all contributing to the buzz. Again, of course, the price action is the biggest contributor to the buzz, but seems that this narrative still has legs, even while the market pukes.
Yes, there's a growing chorus of people who are pointing to privacy coins as a hedge on your Bitcoin holdings. People are saying that, like the cypherpunks, the OGs, are cashing out of their Bitcoin and moving into privacy coins. There's probably something to that narrative.
It's always one of those things where, like we talked about before we went live, you look at the chart, Zcash chart, and it looks parabolic. So it just feels so dangerous to be getting in now. But then again, parabolas of past, at any point in the parabola, it looked like a bad time to get in. So what to do?
All right, let's move on to XRP. So last Thursday, Canary Capital launched the first, quote, pure play US spot XRP ETF. It's listed on the NASDAQ as XRPC. And it debuted with a record-breaking $58 million in first-day trading volume. So that's the strongest debut of any ETF in 2025, narrowly beating out Bitwise's Solana ETF, which had a $57 million opening inflows day. And both of those are far ahead of all the other 900 ETF launches this year. 900. Incredible. Anyway, the initial results hint at institutional or TradFi-based demand for a pure play spot XRP ETF. By the way, what does pure play even actually mean? Well, there was another ETF with XRP exposure. That's the Rex Osprey XRP ETF. XRPR, which launched in September of this year.
Terrible names, man. Terrible names. XRPC, XRPR.
Yeah. Well, with 900 ETFs launched in the year, I'm sure you've got a limited choice of ticker names. Anyway, the Rex Osprey XRP ETF, they primarily held spot XRP, but they could also allocate a portion of XRP related ETFs and derivatives. And it also used the Rex Osprey ETF used some sort of obscure regulation to come in, like to be allowed to operate. It's something from the Investment Company Act of 1940. And the Canary one uses a different framework, one for commodity style spot products. So that's what the pure play means in it. And the investors get the closest thing to actually owning XRP directly via a brokerage account. Yeah, so Canary's ETF had $245 million in net inflows on the first day, while the Rex Osprey product had an estimated net inflow of 115 to 119 million.
And that's the difference here is Canary's was 1 day. The Rex Osprey one is over since the beginning. That's the total net inflows since September. So
right,
it shows you the big difference.
And one analyst at least is predicting $5 billion in net inflows in the first month for Canary's ETF. Meanwhile, the price of XRP is kind of teetering. It's, as of yesterday, trading around $2.20, hovering just above a critical support level. If that doesn't hold, the chart analysts would predict that there's a significant downside after that. So yeah, the path of least resistance is a continued downward trend. So with both the XRP and Solana ETFs doing very well, in both cases, the price of the underlying asset has not done well. So ETF inflows here not tracking with the price.
Yeah, we talked a little bit about this on Token Narratives, and I think this is to be expected when King Corn Bitcoin is not doing well. Everything else usually does poorly, unless you're like privacy, which is wild. Okay, so I would say the biggest pure crypto news of the week. All this other stuff has been kind of TradFi-ish, TradFi adjacent. And then the biggest kind of DeFi, at least, crypto news of the week was the Uniswap Unification proposal introduced by founder and CEO Hayden Adams. This has been kind of universally lauded by everybody in crypto, and it basically aims to do a number of things. First and foremost, it kind of aligns all of the different parties in the Uniswap ecosystem, the equity holders, the token holders, the company that runs the equity, the company that basically represents the token holders. And it turns on, finally, the much talked about, long overdue protocol fees for token holders. All right, so there's a lot of different components to this. First and foremost, the equity holders have had fees for this whole time, right? And so the front end of Uniswap was able to charge a fee to users and collect it. This didn't apply to anyone holding Uni, which is pretty wild. So if you were a Uni token holder, you just had that nebulous benefit of governance, right? But the private equity got to hold all of the benefit. This is now changing. All of those fees that were being given to the equity holders, that's all done. Those are shut off. And now everything is being activated towards the token holders. They're also burning 100 million Uni tokens This is a retroactive burn that they're saying, and this represents what would have happened had the fee switch been possible since 2020, I believe. They're also merging Uniswap Labs and the Uniswap Foundation again. So they were separated, but now they're all under one umbrella. And there's a bunch of little things like 20 million uni annual growth budget here. But basically, the overall gist of it is unifying the company and putting everybody on the same kind of incentive path, I guess. Yeah. This is all possible though too because of the change in regulatory antagonism from the SEC, and the gossip, the rumors are that this has been in the works ever since the administration changed, and so this is finally kind of the fruit of all that planning. So major story. Everybody happy about it.
The price of the Uni token pumped pretty good on this news, up to around $9. It's fallen off a bit since then. Just by comparison, though, the all-time high for the Uni token was above $40 back in DeFi summer. So still a long ways from that price.
Yeah, pretty big difference.
All right, and our last story for the week. I think this has gone under the radar for a lot of people, but I think this is pretty big news. So Visa launched a new blockchain-powered pilot, which enables instant stablecoin payouts for businesses and gig workers. So the initiative, which they revealed at Web Summit in Lisbon, lets companies, and it's only companies in the US to start in this pilot. It lets these companies send payouts directly to users or workers or employees' stablecoin wallets instead of sending to a card or a bank account. So we have a statement from Chris Newkirk, who's the president of commercial and money movement solutions at Visa. And he said, quote, "Launching stablecoin payments is about enabling truly universal access to money in minutes, not days, for anyone, anywhere in the world, whether it's a creator building a digital brand, a business reaching new global markets, or a freelancer working cross borders. Everyone benefits from faster, more flexible money movement." It's a pretty corporate statement there from him. Obvious stuff, but I just think it's very interesting that, Visa has found a way to leverage the stablecoin networks to improve global payments. I assume that they're doing this because it lowers their costs and it improves user experience.
I wonder if they're going to lower their fees to merchants. My guess would be no.
Yeah, not just yet. All right, David, I think that wraps it up for the week. Any last thoughts?
Oh, yeah. I mean, price action is pretty bearish. Lots of the economic data seems pretty bearish. Timeline is pretty bearish. But I think you just got to hold through this. Don't do anything crazy or rash. And it'll be okay.
Well said, David. All right, I'll catch you on Friday for Token Narratives. Have a great week, everyone. Thanks for listening.